Hey traders, welcome back to session 4 of this 6-part mini course to help you upskill your trading ability. In the last session, we explored the concept of risk acceptance. Today we'll delve deeper into how it impacts our trading psychology and the mistakes that we make. If it's been a little while since you did session 3, it's worth reviewing your answers as a bit of a refresher. If you've just completed it, let's jump right in with another quote. This one is from page 10 of Trading in the Zone by Mark Douglas. So on page 10, Mark states, when you learn the trading skill of risk acceptance, the market will not be able to generate information that you define or interpret as painful. If the information the market generates doesn't have the potential to cause you emotional pain, there's nothing to avoid. It's just information telling you what the possibilities are. This is called an objective perspective, one that's not skewed or distorted by what you're afraid is going to happen or not happen. So let's do a little bit of self-reflection. For you, does the market at times generate information that you interpret as painful? Yes or no? If the answer is yes, what kind of market information triggers those negative emotions? Here are some examples. It could be prices falling for a stock that you own, your account value dropping below its highest point or what's known as drawdown, a company skyrocketing that you missed out on, or selling a stock at a loss. Can you relate to any of these? Or do you have your own examples? I bet we all have some of these in our trading lives. Write them down so that you can easily refer to them later. If no, do you ever make any decisions that you would consider a mistake or an error? If yes, list a few examples of the mistakes that you've made. Okay, great. So from there, Mark continues at the top of page 11 to list a subset of the many errors traders perpetrate upon themselves time and time again as a result of not learning the trading skill of risk acceptance. He then continues on to say that the errors I already mentioned and many more are strictly the result of what I call faulty trading attitudes and perspectives. Faulty attitudes that foster fear instead of trust and confidence. I don't think I could put the difference between the consistent winners and everyone else more simply than this. The best traders aren't afraid. Do you agree that your errors are a result of faulty trading attitudes and perspectives that foster fear instead of trust and confidence? Yes or no? If no, what do you believe causes your trading errors and mistakes? Do you agree that the simple difference between consistent winners and the rest is not ever being afraid at all when operating in the markets? Yes or no? If you aren't afraid at all for every buy and sell that you place in the market, that's great. What trading attitudes do you think you have that helps you achieve your fearless state of mind? Remember, understanding the root causes of your trading errors is crucial for improvement. By acknowledging the role fear plays, we can start developing a more objective and fearless approach to the markets. All right, that's it for session 4. You're almost there. 5 and 6 to go. Join us in session 5 where we explore the 4 primary trading fears and what you can do to overcome them in order to gain more trading confidence and stop making costly errors once and for all.